Welcome everyone to this session today in collaboration with the UN Global Compact, between Tharawat and the UN Global Compact. This is going to be our program today. The session will run for about an hour, and I have the great pleasure to welcome three wonderful participants and speakers. First of all, we welcome Claire Kels, who is a Senior Manager in Corporate Engagement at the UN Global Compact in New York. And then in a later session, so Claire will give us a fantastic introduction around the UN Global Compact, the SDGs, but also more specifically around the business case of sustainability. In the second part of our session, we will have Samar Ibrahim and Ahmad Al-Fadl, whom I will introduce a little later on, to talk about kind of the family business case and how family businesses engage in sustainability, and really share with us some practical insights. So the whole purpose of our session today is to be as practical and hands-on as possible, so that really you can take away insights and tricks and tools for your family business in order to implement it and have a discussion around sustainability going forward. So before we start with our session, just a couple of details here. If you have a question, feel free to chime in the Q&A session. You can also send me a message. I know most of the people who have registered on this for this call, so feel free to let me know if you would like to speak. I can activate your voice, and you can also give your opinion or ask a question live. So you're most welcome to tell me that. Please feel free to participate in our polls. We have a couple of polls lined up that we would like to understand a little bit where everybody stands. And of course, if you have any issues, feel free to message me or Joy at any given moment. So, well, without any further ado, I'd like to welcome Claire. First of all, Claire, thank you so much for the collaboration. It's a pleasure to have you with us today. And I think I'm basically just going to hand over to you to give us an introduction on the UNGC and the SDGs, as well as the business case. Thank you for being here.
Fantastic. Thank you so much, Farida, and thank you to the Tharawat Family Business Forum for helping put this together, your collaboration. I think we're very excited to explore this, and I know personally I'm very interested to learn more from family business professionals and family-run firms about the meaning and relevance of sustainability. So thank you. So I will share my screen. I have some slides to share. And it's a very comprehensive presentation. So I will be skipping over some slides, but we will absolutely make available the slides for all participants in follow-up. So if there's anything that I skip that looks interesting, we'll make this available. I'm also available for any follow-up discussions, and I'll share my contact information in the chat. So, all right. So just a quick background about me. My name is Claire. I'm based here in New York City at the UN Global Compact head offices. I've been working with the Global Compact for about 10 years, always working to connect business to our activities, our programs, our tools, all of the work that we do to really help them transform their sustainability and corporate responsibility impact to really help achieve a better world. So jumping into what the Global Compact does and how this can help your business, and really what is the business case for sustainability. So the Global Compact was founded about 20 years ago by then Secretary General Kofi Annan as a call on business to be more responsible and more sustainable in line with the norms and values of the United Nations. He made this call in a speech at the World Economic Forum, and there were about 40 or 45 businesses, CEOs in the room. And these CEOs said, yes, that sounds good. What do we do? Where do we sign up? So that led to really the creation of the Global Compact as an initiative. And that call on business to be more responsible and more sustainable took the shape of 10 universal principles that CEOs commit their company to upholding in strategy and operations. So those 10 principles cover human rights, labor, environment, and anti-corruption. So it's important to note that the Global Compact takes a very holistic approach to sustainability. And I think that really helps companies build a more robust, rigorous, authentic, legitimate corporate responsibility or corporate sustainability program. We've grown over the past 20 years to have more than 10,000 participating businesses around the world. That includes many well-known multinational corporations, but actually 60% of our business participants around the world are small or medium-sized enterprises. So we are a very inclusive business initiative working with businesses of all sizes, all sectors, and all geographies. The Global Compact is now working since 2015 to help business take action on the Sustainable Development Goals. So the SDGs were adopted by the UN member states. So all governments of the world unanimously adopted 17 goals to help create a better future. So these 17 goals represent solutions to tackle major issues the world is facing, and they have a deadline of the year 2030. So we have 10 years left to achieve these SDGs. And the way the Global Compact approaches this is that the 10 principles that we were founded on remain the foundation of our work. And the 10 principles represent how business should how business should operate, how you should treat your employees, how you should treat the environment, how you should conduct your business. And the SDGs represent goals that business can work towards, that all sectors of society should work towards, but of course, business has a critical role to play. So the analogy that I like to use is, if you're a student, your goal is to get good grades, but how you get there is just as important, right? No cheating, respect your teacher, respect your classroom, respect your fellow students. So the principles are the how and the goals are the where. Where are we going to and what are we doing? And this is important because currently the world is not on track to meet the SDGs by the year 2030. And we can see here on this slide some of these statistics and data showing how significant the gap still is, especially on gender equality, climate change, biodiversity, the worst forms of child and forced labor, and issues relating to waste and plastic waste. So these are critical issues that business has a role to play in identifying solutions through their core business activities. And of course, we've seen the COVID-19 pandemic have a significant negative impact on the progress towards the SDGs. So the progress was slow and now it's become more fragile. That being said, there is a ray or two of light that we've seen that there is some emerging data or signals from the market that sustainable investments and sustainable companies have been more resilient throughout this economic shock. And so I think it's important to note that that's one of the key foundations of the business case for sustainability is building resilience in your business, but also in your community and the economy and the society in which you operate. So resilience to all of the future shocks that we can expect to continue to come is really important to create your business to be fit for the future, for the next 30, 50 years, as the disruptions from our changing world become more pronounced. Building resilience is critically important both in your business, but also in the wider economy and society. All right, so I am going to skip over some of these slides. But again, I mentioned we'll share these slides in follow-up and you'll have full availability of these. So how does the Global Compact help? We work with companies in 3 areas. So building trust and transparency through disclosure and reporting, the practical tools and resources to help companies achieve sustainability objectives, and then bringing the voice of responsible business into global and national partnerships and policy dialogues with other stakeholders. So I'll touch on a few examples of each of these and also share how this contributes to the business case for sustainability. So a key component of the Global Compact, that when companies commit to joining the Global Compact, upholding the 10 principles, taking action on the SDGs, they also commit to reporting annually on their progress. That report is fully public, fully transparent. It goes through our website, but that report is really important because that is a way of being fully transparent about your company, and also to communicate with your stakeholders. And that transparency and disclosure is important to, as a baseline, but also sustainability reporting can be a tool for your business to measure and manage your sustainability activities. I'm sure you've heard the saying, what gets measured gets managed. And a report is a tool to help shape that measurement. What are the indicators, what are the metrics that you are using to track whether your sustainability or responsibility activities have any impact? That's important because we want to ensure that companies that undertake sustainability activities are actually having positive impact. How do we do that? Measurement and reporting and transparency and disclosure. So reporting is not just a tick box exercise, but it's a tool to help your company measure and manage whether the investments that you're putting into your sustainability programs are having positive impact. And then I mentioned communicating with stakeholders. That can be your customers or your clients or other business partners, but it can also be investors or financial markets. I have some slides later on showing the scope and scale of sustainable investments, how that's growing, what are the market signals, what are the signals from the market about the appetite, the growing appetite for sustainable companies and sustainable investments. So being able to communicate to investors in the financial markets that your company is actually taking action on sustainability is critically important. Okay, so again, I'm going to skip over some of these, but you'll have full access to all of this. So how do we actually then practically help companies create a sustainability program within their company? We offer a number of tools and resources, from self-service tools and resources on our library to some more guided tools and resources. And one I want to share in particular is the SDG Action Manager. So it's publicly available through our website. Your company has full access to it. It's not behind a paywall or anything. It's a digital online tool that companies can use to do a self-assessment, right? So it is driven by your company. So it's a self-assessment that can help identify your baseline as well as areas for improvement and a risk assessment for not taking action. So it's a great tool to help guide you through some of the key issue areas, the 10 principles, the 17 SDGs, and based on your responses to the questions in the tool, you can see how you compare to certain leading business practices. Are you, do you have those policies and procedures? Are you taking those actions that have been identified as global best practice? Yes or no? And then the tool can provide that baseline, that self-assessment, as well as an indication of how to improve. So it's a great tool to get started on the 10 principles and the 17 sustainable development goals. Okay. One other program I wanted to highlight as well are our accelerator initiatives. Now these are delivered through our local network. So these are actually an example of a program that are available to companies participating in the Global Compact. SDG Ambition is an accelerator initiative designed for a cohort of companies who want to come together, participate. It lasts about 6 months, and then we start it again for a new cohort. Companies that participate will come out with a way or have identified corporate commitments that they can make in their own company. and as well as a tailored action plan for how to achieve those commitments, right? So we are mobilizing and encouraging companies to make ambitious corporate commitments related to sustainability and responsibility. For example, gender equality, carbon emissions, water management, zero waste, living wage, all of these critically important commitments that companies can make those commitments, and then create an action plan about how to actually bring alive that commitment. So this is an example of a program that we run to help companies do that. Young SDG Innovators is a program designed for young professionals with high leadership potential at your company. They can join this accelerator initiative, be part of a peer cohort. So, peer networking, peer knowledge sharing is an important part of it, but also to learn from mentors and get some coaching about how to use the sustainable development goals to drive innovation in your company. New products, new services, new business models that are designed to help achieve and advance the sustainable development goals. So again, not only contributing to the future of your own company, right, innovating for the future, but also then contributing to societal needs. So that win-win shared value creation concept is embedded in all of the work that we do. Okay. So, all right, so the business case, getting to some of the important stuff. Taking action on sustainability and taking action on corporate responsibility in the short term, can already start improving efficiency, customer loyalty, trust, your brand awareness, employee engagement. So really, there's a lot of short-term improvements that sustainability can drive. And in fact, one piece of data that I've seen is that over the past 15 years or so, 85% of a company's value was in tangible assets. So, goods, plants, facilities, etc. Over the past 15 years, that's switched dramatically. Now, 85% of companies' value is in an intangible asset. So brand, trust, things like this. That is based on sustainability and responsibility 100%. So it's really important to your company's brand, media, PR, supplier relations, all of these short-term benefits are there. Now, those short-term benefits will drive longer-term financial benefits for your company in profitability, corporate valuation. I have some slides coming up that show data on higher corporate valuation based on sustainability and lower cost of capital. The signals from markets and investors are really showing their appetite to invest in sustainable companies. And that is what drives long-term contributions to society and business in parallel, hand in hand. So the short-term improvements drive longer-term financial returns for your company, but also long-term value for society. And in fact, we see this. CEOs are really realizing the future business value of sustainability, right? So significant proportion of CEOs understand the current importance of sustainability to creating future business value, but they see that this will only increase over the next 5 to 10 years. So it's important already, but it's only going to become more and more important to creating value for your company. And improved financial performance. So here's a few pieces of data. On the right side of the screen, you can see a comparison between a stock index for traditional mainstream business and a stock index for more sustainable companies. And the sustainable companies outperformed by, I believe, 7%. So that's higher market valuation. And we see also here that based on some studies, that companies with higher sustainability performance can have higher return on equity. So some really strong data points showing improved financial performance of companies. When we say sustainability performance in terms of the markets, usually markets use the phrase environmental social governance, ESG, and there are the UN Global Compact. Participation in the UN Global Compact is increasingly becoming an indicator or a metric used by investors to evaluate the sustainability performance of companies. And indeed, investors are listening. The signals from the market are strong and growing. We've seen an increase in sustainable investments and sustainable funds from BlackRock, major investors, and this pool of funds is large, but also growing over time. An example of a company that launched an SDG bond. This is a very practical example of a company that raised capital tied to their sustainability performance. And I think this was oversubscribed within 3 minutes or something. Like, the appetite from investors to invest in sustainable companies is amazing. Some more data points on valuation and creditworthiness. Again, I'll skip over some of this, but we'll share all of these data points. So if you'd like to get involved, please reach out. I'm available. I'll share my contact information in the chat. And I look forward to staying online and answering any questions or continuing the conversation. So thank you very much again, Farida and your team, for inviting me, and I look forward to the rest of the discussion.
No, of course. Thank you so much, Claire. First of all, for being here with us, even though I know that time-wise, it's first of all, it's a very busy time and it's very early for you. But second of all, of course, we are going to send out all the information also to our participants and our members. There's a lot of people who are actually stuck in traffic and messaging me, so they're all missing out, sadly. But we will definitely send it to them, and the session is recorded, so we can also share it with them. But I'd like to really thank you, Claire, for giving us such a very clear overview and insight on what we are talking about. What is this topic? What are the SDGs? Even how does it relate to ESG, and how does it impact our business models and our work? So I think that's a really helpful start to this discussion. And I'd like to invite my next panelists. I'd like to invite Ahmad Al-Fadl, and I'd like to invite Samar Ibrahim to come and join us. Samar Ibrahim and Ahmad Al-Fadl are great friends of Tharawat. Some of you might have attended some of their sessions before, and it's really always a pleasure to welcome them. And I'm glad actually that Claire is going to stay on the call with us, because we can definitely bounce some ideas back and forth with her. But very briefly to introduce our two panelists, Samar Ibrahim is currently an associate director at EY, but is also has a background in sustainability, and I'll let her explain a little bit how she got interested in this area. And Ahmad Al-Fadl, who is the founder and managing partner of ESG Integrate, and also both are family business members. So basically, to start off, first of all, welcome. Thank you so much for taking the time to being with us today. It's a great pleasure. And what we wanted to start off with is perhaps give the audience a bit of an impression of who you are, and also how the sustainability topic became of interest to you. So maybe Samar, would you like to start off?
Of course. Thank you so much, Tharawat, Farida, for inviting us to this Tharawat session, honestly. And Ahmad, it's a pleasure to be on the panel with you. From a family business background, I actually am part of Shade Corporation, and it's a multidisciplinary contracting company, and it's present as an EPS contractor across the GCC. But I don't know if it's fortunately or unfortunately, I didn't dive into the family business. I took a path a little bit separately, where I started off in the US working on public relations. And then while I was working in Aramco, it shifted into change management. But it didn't until, sustainability didn't come into the picture up until I was at KPMG. And I guess it was just a passion of understanding more, what is it? It's beyond CSR, there's more that can be done. And that passion drove me then to get my master's from Cambridge University on sustainability leadership. And I think it was at that moment that I realized that we all live with like blinders on, And going through that, you realize there's a whole lens where sustainability isn't this thing that you put on the side, it's part of every day. So that for me was a big transformation. And then I took that, and when I shifted across to the Prime Minister's office in the UAE, I started seeing how sustainability can go beyond just in business. It's on the way that we operate, the way governments operate, the way the world is functioning. So I think for me, that's where you see sustainability is very versatile, and it's across all of the roles that I've taken. And I recently joined EY, and now I look at the government and public sector across the MENA region. So hopefully we can embed a little bit more of that vision across the board.
Excellent. Thank you so much, Samar. Ahmad.
Thank you, Farida, for inviting me. Always a pleasure being part of a Tharawat event. So for me, I've been in the financial industry for 18 years. That's the angle, if you wish, through which I've discovered sustainability and ESG. I've worked in the wealth management, corporate advisory field, as well as the private equity. And it is just incredible to see the interest in ESG investing and what it is doing to the investment world. I've read a lot about it, become passionate about it. Eventually decided to create ESG Integrate to help institutional investors and companies with their sustainability journey. Yeah, in fact, it's a very interesting subject. And there's quite an important gap between where the MENA stands in regards to its sustainability journey and where the West and some parts of Asia are. And again, this was another reason why I wanted to hopefully contribute to that progress.
Thank you, Ahmad. So I see that we have some fantastic people, by the way, in our audience. I know some of them very well, and I know they have a lot of opinions about this topic. So I'm going to encourage you, ask your questions, chime in, participate in the conversation, because really this is about dialogue, and it's about, as a community, as a family business community, for us to make a step forward jointly and even collaborate where we can collaborate. So before we kick off our session, I'd like to launch a quick poll, and I would be delighted if everybody could join in. And it's a question around the sustainability strategy in your company. So if you look at your family business, is sustainability incorporated into your short, medium, and long-term corporate strategy? So you could say yes, you could say no, or you could say no, but we are currently working on integrating it. So I'll give you a minute or two to answer. I can see the numbers rising. This is very interesting. Thank you everyone for participating. I'll give it another 10 seconds and we will publish the results. So quite interesting. 25% of our attendees say yes, that they have sustainability incorporated in their corporate strategy. 38% say no, and 38% say no, but they're working on it. So quite an interesting spread. I would say the majority probably still has some work to do, but there are some people who have been integrating these thoughts into their corporate strategy. So I'd like to get started on our discussion with perhaps a question related to why we are bringing this topic together. Why are we specifically speaking about sustainability and family business? And since you're both from a family business background, perhaps you can give me a little bit of insights, and maybe Ahmad, you could start off, is why do you think there is somewhat of a natural connection between sustainable thinking and sustainable strategy and family business?
So family businesses, around the world and specifically in this region, they are some of the largest employers and are some of the largest companies. And therefore, it's very important for them to be involved in that transition that is taking place. Family business is the succession aspect is an important element of it, right? And succession without discussing sustainability is probably doesn't lead to the right results. And I know from many conversations we've had in that regard with other families some few years back, sustainability is not a subject matter that was brought forward as part of handing over to future generations. and therefore this is an extremely important element to the sustainability of family businesses.
Samar, any points on this from your perspective?
I'm completely aligned with Ahmad, and I think the higher way of looking at it, or the higher umbrella above this all, is as a family business, it is your mission, it is your purpose to sustain and to continue from generation to generation. So sustainability isn't this nice to have, it's the reason that you exist. And as a family business, you need to make sure that you can go from generation to generation.
Absolutely, and I think I mean what Ahmad was saying is the idea of looking at it because of the succession process that you have. I mean, we don't think in 18 months, 24-month returns, right? We think in generations, and I think that is where the natural connection comes in. Do you also feel that because of the legacy as well? So now we've been looking at the future, right? But we can also look back. And because we have been embedded in certain communities for such a long time, do you feel there is a natural inclination to have this connectivity with your community on different levels and, you know, work with your stakeholders in a different way?
Go ahead, Samar, please.
No, Ahmad, please go ahead.
So, in fact, family businesses are, especially in this part of the world and probably globally, are heavily involved with their communities, right? There is an incredible amount of CSR efforts that are done throughout the year, and this is an important part of the transition to a more sustainable world. So there's already an existing amount of important activity that is being done in that regard. So hopefully pushing these businesses or making them more aware about what also needs to be done, because CSR activities is just not enough given where we stand today, given the global state of the environment and of society. But hopefully this will be a natural progression for these family businesses.
I think there is a bit of a confusion, right, Samar, between, you know, our philanthropic efforts, our CSR, and then kind of what sustainability entails and how that then affects perhaps even our business models. Perhaps you would like to comment on that.
Yes, actually, for me, I wanted to say that legacy component that you were talking about is maybe that hurdle or that thing that's holding us back as family businesses. Is we've been so in tune with this legacy that we've done this is the way that we've done it, this is how we give to the community. We feel we are part of this community, but I think it's what's causing us to get stuck. And sustainability is way beyond philanthropy. Philanthropy has a title all on its own. It's philanthropy. It is not sustainability. Sustainability is encompassing environmental components and encompasses social components, which you touch upon in philanthropy, but that's not everything when it comes to a social angle. You've got your employees, you've got people beyond your community, and then of course you've got your governance structures. As a family business, that's something that we need, because the transfer of power from one generation to the next, the transfer of rule from one generation to the next is a complicated process. So sustainability is definitely beyond philanthropy. And I think we need to let go of that legacy a little bit to see beyond.
Well, if we go into some practical reflections now, I mean, maybe you can first of all give me some examples of why you think on a very practical, you know, basically governance roundtable or boardroom table level, it is difficult to even bring the topic of sustainability up. What is the biggest hurdle that we face when we go to our family business and we want to talk about sustainability? Maybe somebody, would you like to start, and then we'll come to Ahmad?
I think it's a universal answer, but this is just from people that I know. It's cost. Being sustainable puts an upfront cost that nobody wants to put, simply because they're barely trying to make do with what they have, especially in today's COVID days. We're all struggling. Sustainability is not something that you want to come and tell me spend more money. But what nobody is looking at is the fact that the reason you're struggling is because you didn't have a sustainable agenda or business model or approach to your business before COVID. That's why you're struggling now. Had that been a conversation you had on the table before, you probably would have had less of an impact. You would have been impacted, but it would have been a little bit less. And I think, unfortunately, since costing is what hinders it, there needs to be a way of looking at it from a long-term perspective. Unfortunately, we're still very short-term. Short-termism is is a big obstacle to this conversation.
Imad, any thoughts?
Yes, I agree with that. There's if you look today at companies, at CEOs, and how they are assessed. If you're a listed firm, for example, you are issuing your results on a quarterly basis. The CEO, the senior managements are judged on a quarterly basis. Sustainability is not something that can be, assessed on a quarterly basis. There's a lot of long-term aspect to it. There's some short and medium-term aspect to it, but it's all about getting to the level where these the business community is in fact incentivized, and their performance and the assessment of their performance is linked with how they're dealing and they're performing on the non-financial side. So there is that short-termism aspect that is indeed a challenge for sustainable development.
If I could just build a little, No, I just wanted to kind of build a little bit off Ahmad's comment. I think there's also an advantage to family businesses, which we are overlooking. As a family business, the turnaround on policy making, the decision-making process is not as bureaucratic. It's a little bit more straightforward. And it's a lot easier to activate change. Unfortunately, we haven't tapped into that potential. I mean, if you look at the likes of Unilever, where Ahmad was mentioning that you go from a quarterly assessment of shareholder values, Unilever's back then CEO, Paul Pullman, came out and said, I will not issue reports on a quarterly basis because it's not sustainable. I could suffer in one quarter, I will make it up in another quarter. You should not be judging me on a short-term basis. So if an entire company that is global can make that transition, I think it should be a lot easier for family businesses to understand that this is a value. I mean, you even have BlackRock, which was mentioned earlier, where they are the world's largest asset firm. And to them, they're looking at sustainable reporting being unified because they understand the power of ESG in ensuring that your risks are minimized and ensuring that you have right asset valuations. So there is benefits and value in sustainability. And as a family business, let's take advantage of that quick turnaround that we can possibly embed.
Exactly. So I think this is where I find it becomes very interesting, because it becomes very practical down the line, right? So if we look at the business case, how do I address, when I look at let's take a general family business, slightly diversified in a couple of industries, with, let's say, second, third generation engaged in the family business. So I would say that's kind of our average situation in the region right now. So what do I now do in a first step to, first of all, understand how questions of sustainability might, first of all, impact my firm? So what would be my first step to start talking about this topic? Maybe Ahmad, you want to go first?
So yes, very important question. The issue with sustainability, that it's quite of a broad word, and although there's there's a definition that has been put on it specifically by the United Nations, which says that it's meeting the needs of the current generation without compromising the ability of future generations to meet their own needs, but it's still kind of broad. So first step is to understand its materiality. It's to understand how your business is impacting the environment, society. This is something very important. And it's also important to understand your stakeholders' views towards your company from that specific sustainability lens as well. So there's stakeholder engagement that needs to be done. One has to map out who their stakeholders are, prioritize them, and start engaging with them on sustainability related matters. But which topics? This is where materiality comes into play. And if we are to go back to the Sustainable Development Goals, which I believe are a very essential compass to businesses that tells them basically where the world is heading, where the world economy is heading. If they map out their value chain, they'll be able to tell which part of because businesses are responsible for their full value chains, by the way, not only for their specific part. Which part of the value chain is impacting which one of those sustainable development goals? Certainly there are some positive impacts, and there are also some negative impacts that they should manage and they should reverse. So it's all about, there are 17 goals. No one is expected to contribute to the 17 goals, right? It's what is material to these companies. That's where they should start, in fact.
I'm sure, Samar, you have a lot of comments on this point.
Actually, Ahmad touched on the most important thing, which is understanding your stakeholders and materiality.
Mm-hmm.
I think that's the first step that anybody should be looking at, is understanding. If I know it sounds really easy, but understanding who your stakeholders are is probably one of the most difficult things that any entity will have to go through. Yeah. And people pay money for other companies to come and do it for them simply because it's a tedious task. It's not easy. You assume you know, but you really don't. I think first understanding who your stakeholders are, but before that, understanding what your business is. What's the purpose of your business? I mean, we don't need to look at these large examples of corporations. We can look at smaller entities. So you've got B corporations. B corporations are corporations that are founded, and their purpose for existence is because they are mapped to an environmental purpose or a social purpose. They have a reason for being. And you have companies like Patagonia, which started out small, but because of their purpose, they're large and they have an international presence. So don't underestimate the power of purpose. So you as a business, understand what is your purpose? What are you trying to do? What are you trying to achieve? And then try to find ways to embed that by then understanding, who are my stakeholders? Who am I trying to touch the lives of? But at the same time, who is impacting me in any way, shape, or form? Some of them are big, some of them are small. And then comes materiality. Materiality is there because if you look at the full spectrum of everything you need to do, I mean, just look at the SDGs. It's 193 indicators, if I'm not mistaken. And then you look at them and you are mind boggled. You don't even know where to start. Exactly. And then the Global Compact is a good way of just picking out the tools that are there, understanding what they offer businesses. So there are tools out there to help you look at who your stakeholders are, what is your purpose, and then looking at materiality of saying, what is the most important thing for me now? I don't need to look at everything. I don't need to touch base with everything or change everything. What are the priority number 1, 2, 3, and so on and so forth? That can help you start to turn the wheel.
I think this is a very important perspective to have, because I feel sometimes we misunderstand that, or specifically when I speak to business owners, there is this sense, because of perhaps our background in philanthropy or because of the way we used to deal with our stakeholders in the past, is that it's just a one-way street. It's about me having to mitigate my impact. But actually, it's a two-way street, because it's also these mega trends impacting me and constituting a new risk landscape. And I feel, and I'd love to have your comments on this, that we perhaps are not fully up to date with our risk assessment of the firms that we have, in order to see how do these mega trends impact us? And if I have more sustainable business models, that I can actually mitigate that risk more easily. So maybe Ahmad, do you want to comment on that?
Sure. So once you do assess what topics are material to your business, then you go on, in fact, to assess these factors. In fact, what type of risks is it posing on your company, on your sector first, and then on your company, and what type of opportunities are they opening up? Now, when we're talking about risks, you have an operational risk. There is, for instance, a shift to renewable energy, obviously. So that certainly is a concern to oil and gas companies. I think there's a statistic that says that about $1 to $4 trillion in oil and gas assets will become stranded by 2030. Stranded meaning will produce absolute no value. So this is certainly an operational risk that needs to be taken into account. There's a regulatory risk. This is going to become legally binding, whether it is for companies to go carbon neutral by a certain date, which is 2050, in alignment with the Paris Agreement. There are countries now that are making it legally binding. You see a lot of companies that are, in fact, making that initiatives to pledging to go carbon neutral. So you have these regulatory risks that you should be aware about, and that you should manage that risk. There's also reputational risk that is there. So all these things need to be very carefully managed. But also the SDGs, if you wish, I think that's the Business Sustainable Development Commission that mentioned that it will be unlocking at least $12 trillion in business opportunities, creating over 300 million jobs worldwide. So and this is because businesses have an important role to play. They are the ones that produce the products and the services. They are the ones that have the expertise and the necessary research and development to help with that transition.
Yeah, I think so. I think this is a very key point, is to understand our risk landscape and not just look at sustainability as something, that I need to invest in because it makes me feel good or look good. So I think that's a shift in thinking that we need to have. Samar, I'm going to get to you, but there's a question that I find very interesting from the audience. One of our participants is asking, do you think we need more discussions and educational tools catered to the MENA region only, as typical environmental challenges and opportunities are different? I mean, environmental, social, any other challenges are different across various regions. And I think that's a very, very valid question. Any reflection on that, Samar?
Definitely. I mean, every region has its own challenges. I think first, understanding sustainability as a whole is necessary. But then when you look within your own business, you start realizing what are the hurdles that you need to come across. So there are many tools like the Global Compact that looks at by region, what are the tools that are relevant to you? What are the conditions that you need to consider? There's different organizations within each of the regions around the world that look at how do you apply the SDGs. So the tools are there. It's just a matter of how do you get a hold of them? Unfortunately, because there's so much, you don't know which one is the right tool. So I think it's a little bit of more getting to where you need to go. You need to go through this journey of starting somewhere, start anywhere. Yeah. Maybe the Global Compact goals is a good way to start, and just start from there and say, okay, this is of interest, and you branch out because the tools are there. They're all available. They've been around for a while. The SDGs have been around for 3 years now, if I'm not mistaken, 4 years. So the tools have been there. There's a lot of tools on the wide web that are there, and it could kind of help you on that journey.
But I do think, I mean, coming back to Ahmad's point on materiality, I think the essence is that, when you look at your family business, you actually sit down, you take the time and reflect, how do I impact and how will I be impacted? And I think that's a very, it sounds like a simple question. It's a complex question, but it's an addressable question. And I think this is where, we can perhaps take a first concrete step, is to sit down literally with one sheet of paper, draw up, our business activities, and be very, simplistic about it perhaps in the beginning, and say, okay, who do I impact and who impacts me or will impact me, or what will impact me in the future, and how does that affect my my business model? I want to talk a little bit about business models, and also Ahmad, since you're here with us, also on kind of family office decision making and investments, because I think the sustainability kind of is it a bit of a hype perhaps that now every single kind of investment conference also has something around sustainability? How real, is this discussion? What do you see in the marketplace? How real is this discussion, and how does it really impact perhaps family businesses, who are investing, either direct investments or investing in funds? What reflections should we have when we go about these decisions?
Absolutely. So first, let me clarify one myth or misconception that we see sometimes when having discussions with institutional investors around ESG and some family offices, is that there's that point that, but financial returns still matter to us. In fact, yes. So ESG investing does not take away from financial performance, but rather enhances your risk return profile. This is something that's important to mention. Is there a hype around ESG? Yes, there is. Does this worry me a bit? Yes, it does, because normalization has to take place at a certain point. So when things are going up incredibly, we know that eventually they need to normalize. That means they need to go down into a certain normal level and then take on a more of a sustainable growth. But at the end of the day, ESG, hopefully the term in 5 to 10 years time will disappear, right? Because it's going to become normal for us to assess companies before making an investment using that add-on ESG lens. add on to the traditional way we currently assess companies via discussions with management and these financial statements. But clearly, it is no longer enough to only have a look at these financial statements to assess the resilience of these companies, but rather to look at the ESG factors. So this is, it is becoming a must. And you know, when you learn about it, then you wonder, how come have I not been doing that since day one? Because it's only natural to look at how a company is treating their employees. If, there are external costs, right, that we don't see today, that eventually are going to internalize.
Sure.
If we're talking about just a simple example of a manufacturing plant that is emitting a large amount of greenhouse gases while producing a beautiful product that is selling, and this company, in fact, is profitable, right? Who's paying for that cost of polluting the environment? Not the company itself today, but the community that is breathing this, the polluting air. But with time, and quite sooner rather than later, they will have to internalize this cost, because someone is going to come and say, no, you have to pay for that yourself, either through a tax on carbon, or through the exchange, the emissions trading system that is in place in different parts of the world, whereby there's a budget on the amount of emissions that you can release. And if you go above that, then you have to pay for it. So today, if you are assessing a company, you have to take into account and put in a scenarios where these costs will be embedded inside the company, and therefore the valuation of the company changes.
I just shared a link to one of the Tharawat magazine issues that actually looks at some examples of family businesses, you know, that have had a very smart take on how to incorporate and actually turn, you know, risk factors that they were facing in their business models into opportunities. And so I'd like to perhaps slowly start closing our conversation, but not before we start talking about business models. So, you know, family businesses are businesses. We are always looking for opportunities, and we, you know, this is what keeps us going. This is the entrepreneurial spirit that we are excited about and that we want to look at. So my question, Samar, is how can sustainability enhance our search for more interesting, more impactful, more successful business models?
There's a lot of business models that you can shift into and transform into, but I think the core of it is you need to look at a business model that is more stakeholder focused than shareholder focused. And to do that, you also need to look at another component, which is long-term. I think every person in this equation, when they're looking at strategy, looks at the next 5, maybe 10 years. They don't look beyond that. But you had tapped on megatrends. Megatrends are not this nice futuristic concept that is, wow, cool to listen to. These are real facts. I mean, you look at the likes of Kodak. One of the megatrends in the time of Kodak was technology. It was overlooked. They ran out of business because they weren't ready for smartphones to come in and nobody needed to print a photo. That's what megatrends, they are introduced to us. So you have the simple megatrend of consumption patterns. They are completely changing. And with COVID, they're changing even more. So there isn't a specific business model that fits everybody. It's understand who your stakeholders are and have a bit more long-term perspective. Understand that megatrends are not only risks, they actually open the door for opportunities. You have business models that are looking at pay per use. So I'm only going to pay, for example, from cloud services. I'm only going to pay for the amount of services that I use on the cloud. You have businesses that are shifting from product to actual servicing offering. So there's a complete pool of business models that you can look into, but none of them will be of any use if you don't look at who your stakeholders are and have a bit more of a long-term perspective, because that's how you make the impact of changing your business model. You open up to new opportunities. You'd be surprised how many family businesses or businesses in general would be surprised at the thing that they overlooked simply because they were only looking at what they've always done. So it's just being a little bit more open to the fact that there's going to be a change. You have millennials that 9 out of 10 millennials are actually willing to pay extra for a product from a company that is more responsible company. These millennials are next generation who are going to purchase your products. You will lose out on that business if you don't look that way. So the next business model is yours to define based on the analysis that you look at for now today.
Ahmad, any comments on this?
Yes, to echo what Samar very nicely said. First, picking up on the millennials point, for what regards the Middle East, there's about 108 million and you're talking about that 60%. They're constituting 60% of the population, and these are in fact consumers that are willing to pay a certain premium on sustainable product. These are consumers that are willing to in fact source or consume from and support local brands. Globally speaking, we're talking about a handover or from the baby boomers to the millennials of about $30 trillion in assets. These need to be managed, obviously, by the wealth managers and the financial institutions, hence the importance also of integrating sustainability in their strategies. But for what regards business models, yes, there are financial capital providers. We've always been focusing at them, and it is important to continue, in fact, to keep them as part of your stakeholders. We need to ensure that we provide them with a return on their capital. But there are other capitals, there are other resources that need to be taken into consideration: human, intellectual, the environment, the natural resources. So companies that are resilient ones, those that are going to be able to be better able to predict the future and thereby mitigate risks that may arise and benefit from transitional opportunities, are those that are creating value for all these capitals or resources or stakeholders. So you have these capitals or resources, they are your inputs into your business model, which have a certain output, and then there's an outcome. And that outcome has to be creating value for all of those, which means having a sustainable long-term value strategy.
Well, thank you so much, both of you.
Yes, of course. Sorry, just to kind of close off what Ahmad was saying. At the end of the day, this is all behavioral change. So this will require a complete transformation of how you think and how you feel. And that, by the way, is going to be your hardest transition. All the other ones you can map out, you'll get financial sheets, they'll give you the answers. It's the behavioral change that needs to be altered. And I think if we start looking at it from that perspective, you have more potential to actually make that transition.
Well, I think this is a great point. Actually, no, it's not a great point. It's actually a great point to start the conversation, but sadly we're running out of time. So I'll have to start closing the conversation. But before we go, I'd like to give you each a minute to give us perhaps 3 practical thoughts or advice, pieces of advice that you can give, your fellow family business members who are interested in this area, who want to do something in their own family business and just want to get started. Maybe perhaps Samar, you'd like to kick this off?
I think we had touched upon them throughout the discussion, but for me, the first is understand what your purpose is. Without purpose, you as a leader cannot lead. Your employees will not know why they wake up to go to work in the morning. Your community will not know why you exist. So I think the first thing is understand what your purpose is, and that's probably the hardest thing that you're going to do. The second is understand who your stakeholders are, because that's where you understand who you're benefiting from and who you're benefiting in return. And have a long-term perspective. Sit there and say, okay, I know what the pieces of the puzzle look like. I understand where I stand with them and who I'm impacting in what way. How will I prepare for this future? I'm not looking at now. I'm not looking at the next 5 years. I'm looking at where is this future coming from, and then start building your strategy. And by the way, nobody said that your strategy is carved in stone. You can come up with something now. It'll guide you for the next 2-3 years. You find there's things that aren't working. Doesn't mean you throw, you throw the baby out with the bathwater. You don't throw it all out. You just tweak what wasn't working, and you'll be surprised what sustainability, if you put on that lens across everything you do, can make a difference.
Excellent. Thank you so much, Samar. Ahmad?
So perhaps one very important aspect, and I think Samar touched upon that earlier, start anywhere and start today, right? And make sure that you do things using best-in-class standards. This is very important. So yes, start anywhere and start today, but quality over quantity is very important. The United Nations Global Compact has a ton of resources, and so it's important to follow best-in-class standards. If you are reporting on your non-financial information, use the necessary reporting standards, and progress. It's fine to progress slowly at your own pace, whatever it is, but just do it today and do it properly.
Excellent. Well, thank you so much. Honestly, I feel like we are just starting this conversation, and before closing the session, I'd like to emphasize that obviously at Tharawat, we do feel that we need to have this conversation specifically for family firms, at the more regular basis and more in depth, because family firms do constitute between 60 to 90% of the private sector in our region. So, to uplift them and to empower the family business leaders in our region with the right know-how and the right skill set will benefit both our communities, but especially also the longevity and the success, the long-term success of these family firms. So I'd really like to thank all three of you, obviously Claire, Ahmad, and Samar, for this fantastic session. Honestly, I've learned a lot. I hope that we can continue this conversation. I will not leave you in peace. You know that. I always hunt you down. I'd like to close very quickly by pointing out that both the Global Compact and Tharawat, we have upcoming webinars. The Global Compact will be Making Global Goals, Local Business Africa, which is happening on Thursday, the 3rd of December, and we're happy to include a link to that in our follow-up email. And of course, Tharawat's next session is on the 25th of November, which is going to be with the University of Cambridge on aligning philanthropy, next generation of giving. So slightly aligned with what we've discussed today. But I'd really like to thank all three of you. It was a huge pleasure for us to have you here with us. And hopefully this is just the beginning of a very important conversation going forward in this region. So thank you very much. And of course, thanks to all our attendees who have either braved traffic or sat with us in their cars. Like, I've received messages from people showing me where they were watching this from. So thank you so much. Perhaps we're trying next time to find a better timing so that people don't have to, look at the screen and drive. That's more sustainable. And thank you very much for everybody who's joining us also from abroad, from far away, for joining us today. Thank you, and have a lovely morning, afternoon, and evening. Thank you.
Thank you. It's been a pleasure. Bye-bye.
Bye.